Let's talk about our viewer queries. First question coming up from Sanjeet Ruban, and Sanjeet wants to understand his fund mix. He's doing SIP in Parag Parikh Flexi Cap, Kotak Small Cap, and Kotak Emerging Equity. And given the recent market condition and concerns, small and mid cap valuations, the concerns over the valuation for mid cap and small cap, he's been thinking it would be good to consider booking some of his profit from this small and mid cap and switching to any other mutual fund category. And he also wants to understand if Kotak funds which he's holding can be done for a longer period of time, or there are any better funds where he can switch to.
Well, Kavita, since we're talking specifically about small cap and mid cap, look, the valuation can be concerned. It has been a concern for some time, and I'm sure even in future there will be occasions when we will question the valuations. But the fact is that if you're building a portfolio for a longer period, and if you're investing in a disciplined manner through SIP, the fact remains that both these segments, large and small, mid and small, have the potential to deliver higher return than the large cap. But obviously, that does not mean that you will invest only in these two segments. But the fact that you are investing systematically, and if you're investing for a longer period, even if there is a market volatility and your proportion of exposure to these two segments is right as compared to the large cap, which means that there is still a bias in your portfolio towards the large cap, I don't think you need to really worry about that. The major benefit of investing in a disciplined manner is that it gives you an opportunity to invest at lower level and different levels every time the market turns volatile or every time you see a correction. So I think as long as you've chosen your funds well, as long as your allocation to these two segments is fine, you have a longer term horizon and you're following a disciplined process, I don't think one needs to really worry about exposure to these two segments. And let's not also forget that our economy has been doing very well, and you're going to see a rate cut at some stage. So obviously, in that kind of economic growth and that kind of scenario, surely the companies in these two segments will do well. So I really wouldn't be worried about having these two funds in the portfolio, but the proportion has to be right. As for the funds which are there in the portfolio, Kotak Emerging is definitely fine. Parag Parikh Flexi Cap is fine. In the small cap category, I think he can consider Nippon India Small Cap, as against Kotak Small Cap. So I think that's one change in the portfolio in terms of allocation. Like I said, I think both these segments, the exposure to both these segments have to be an integral part of the portfolio.
Okay, let's move on and let's take Raja Maheshwaran's question. Now he says that between 2017-2019 he invested almost 50,000 in 5 different funds. He had Tata Birla, DSP, IDFC and Mahindra Manulife. Now the query is that will he have a profit threshold of 1 lakh without any tax for each individual mutual fund? Or it will be an aggregate of the entire mutual fund investments. He wants a clarity on that.
Well, I think that's an important question. I would say first thing, I think it's important to understand that this exemption limit on long-term capital gain is for a financial year, right? So which means that in a year, if your capital gain does not exceed this limit, you don't pay any capital gain tax. Before Union Budget 2024, it was 1 lakh. Now it has been increased to 1.25 lakh. Now, it's also important to understand where this is applicable. So if you're invested in equity or equity-oriented mutual fund, as well as if you have direct investment in the stocks, both are eligible for this. This is a combined limit. So it's not for each fund. It's not for each of your investment, like I mentioned earlier. It's equity and equity-oriented funds and stock market investment. And this limit is for 1 financial year. So if the issue is that since he hasn't made a large investment, and if he is looking to redeem, if he can stagger over the next maybe 2 financial year, maybe he will end up not paying any capital gain tax on that. But obviously, like I said, it's for 1 financial year and not for any one mutual fund or one particular investment type.
Okay, let's move on and let's take Aditi's question. Aditi says that she would like to invest 2 lakh rupees lump sum in mutual funds, and what kind of funds would you suggest for that? And she would like to invest in both mid-cap and large-cap oriented funds as well.
Well, I think the most important thing when you want to invest in mutual fund is to have clarity in terms of time horizon. Assuming that if the longer term, the view is to invest for longer term, especially if the intent is to invest in an equity fund, through SIP, then the time horizon according to me should be minimum at least 7 years and beyond 7 years. If that's the case, definitely the investment can be made in the equity fund. My belief is when you start, it's important to understand how equity behaves. It's important to have exposure to different market segments, but do it with a diversified fund rather than looking at mid and small or large cap separately, because sometimes the rebalancing or understanding can be a bit of a problem. So maybe a multi-cap fund and a large and mid-cap fund. I think it's the best combination to start. It could be Kotak multi-cap or Motilal Oswal large and mid-cap. If it is going to be one-off investment, if it's the first investment, it's important not to invest the entire sum at one go, because the way the markets have risen and the level that we are in, my recommendation would be to invest through a combination of lump sum and systematic transfer plan. Maybe around 30 to 40% can be invested as lump sum, and the remaining through STP over the next 3 to 6 months. I think that will ensure that you're not committing too much money at one level, and even if there is a volatility, it gives you an opportunity to kind of bring your average cost down.
All right, let's take Sachin's question. He's invested in Parag Parikh FlexiCap, Mirae Asset and Quant also, and Quant ELSS, I think. And he's also got one more fund in his portfolio, Quant and Nippon Small Cap, and Quant Mid Cap also he has in his portfolio. Okay, investment horizon is 10 to 15 years. Hemant.
Kavita, can you repeat the funds? I don't seem to have those fund names with me.
Sure. So it's Parag Parikh FlexiCap, Mirae Asset and Quant's ELSS fund. I think he's got Quant Mid Cap and Quant and Nippon Small Cap fund.
No, I think I would say broadly the funds are fine, and I think the time horizon also allows him to invest in equity. I think he can continue with the existing portfolio.
All right, I think with that it's a wrap on the question answer session. Thank you so much for being on the show and helping our viewers with every aspect of their financial planning on their financial portfolio today. Thank you. And I'm going to leave our viewers with our WhatsApp number and email ID so that you can send across your questions with all the investment details that you have, so that our expert can chalk out a complete plan for your financial goals based on the investments you've made. Thank you so much for watching. Goodbye.